I follow a lot of companies, and SoundHound AI is one of the more difficult businesses to understand. That's even though I've got a master's degree in financial economics, I'm a professor of finance for over 5 years, and I've got a chartered financial analyst designation. It's still one of the more difficult businesses to follow. And I can only imagine how much more challenging it might be for retail investors that don't have a finance background. So here are several factors I'm going to cover in this video that I think SoundHound AI stock investors really should know. So let's take a look.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
All right, so one of the things SoundHound AI investors should know is that the company is generating excellent growth in the automotive and restaurant industry. They continue to see growing automotive unit growth of healthy double digits, in addition to unit price expansion driven by their generative AI solutions. What this means in layman's terms is that they're penetrating more vehicles, right? The number of vehicles they are inside is growing. Also, the price per unit they're receiving is increasing. So they're in more vehicles, and the price they're getting in each of those vehicles is increasing. So that's great news. That's what I like to see from growth companies is expansion in unit growth and expansion in average revenue per unit. And I am seeing that with SoundHound AI. Additionally, the restaurant business is growing nicely, and it now consists of 25% of overall revenue. So these are the two biggest segments for SoundHound AI, and going forward, they will likely shrink in terms of the percentage of the company's overall revenue because it recently made an acquisition of a company that generates revenue outside of these two prime categories. So as SoundHound AI brings in the revenue from that acquisition, the composition of the company's overall revenue will look different, and the automotive and restaurant segment will be a smaller role in the company's overall revenue portfolio. Even though these two segments will continue growing in absolute terms, in percentage terms, they will shrink for the company's overall base. So because of that, because of these acquisitions that SoundHound AI has been making and expanding into different categories, their profit margins have been falling. In the second quarter, their gross profit margin came down to 63%, and that was down year over year, and that's likely to continue perhaps through 2025 because of these acquisitions and the time it takes to digest new acquisitions, because you've got to bring on board a whole new team, and then management of SoundHound AI needs to look at what they can do and where there is redundancies and perhaps how many people they can lay off when they make an acquisition. They do some of that before they make an acquisition. They have an idea of how many people they're going to be able to let go and how many people they're going to keep, but they can't really make a complete evaluation until they complete the acquisition and they get to see everything firsthand, and then they really get into the details of how many people and precisely who they're keeping and who they're letting go. And in that time, their profit margins will be negatively impacted because there's going to be redundancies and they haven't yet implemented the synergies that they expect to implement from an acquisition. So that's something that SoundHound AI stock investors should certainly know about. Sales and marketing expenses in the second quarter were $5.7 million for SoundHound AI. That was an increase of 11% year over year. And the company is saying that we continue to thoughtfully invest in go to market and customer engagement to capture the strong momentum and heightened demand. SoundHound AI management has consistently told investors that demand for their product is off the chart. They gave one example where a year and a half ago or 2 years ago, they used to have to call businesses and beg them, or not beg them, but they used to have to call businesses and try and solicit meetings just to try and get management teams from other businesses that they're trying to sell to to sit down with them so they can make their pitch, make their case for why they think SoundHound AI will be right for their business. The management team in this quarterly conference call that I'm evaluating right now said the opposite is happening now. Instead of SoundHound AI making those outbound calls, they're receiving so many inbound calls that they don't have enough staff to deal with all those inbound incoming calls. And so the script has flipped significantly for SoundHound AI in the recent 2 years, given the rising effectiveness of artificial intelligence, given the soaring wages for labor, and given businesses' interest to automate and innovate through artificial intelligence. And so SoundHound AI increasing their sales and marketing expense, given that backdrop of consumer demand, is a reasonable move, to be sure. Sometimes when companies are increasing sales and marketing expense, I look at that as a negative, because I look at that as, well, organic demand for their product is not very strong, and so the company needs to spend more money on salespeople, spend more money on promotion, spend more money on advertising so that they can create some consumer demand for their products. But this isn't the case with SoundHound AI. SoundHound AI is increasing spending in sales and marketing so that they can fulfill and serve all that increase in consumer demand. At least that's what management is telling us. That's what they're spending money on, is increasing the number of salespeople, increasing their go-to-market capabilities, training those salespeople so that when they get those inbound calls, they know how to turn them into sales and turn them into orders. That's a better way to spend sales and marketing from an investor perspective than the other I explained earlier, where they're spending on advertising and they're trying to create interest in their product. The interest is already there for SoundHound AI's product. Their next challenge is to convert that interest into sales, to convert that interest into orders. And I'd rather be in that position. I'd much rather be in that position if I was a shareholder than the other position. Now, a very important thing for SoundHound AI investors to know is the company is losing money on the bottom line. The loss was $22 million in the second quarter. The company is still relatively small compared to the market opportunity it faces. The company is saying its total addressable market is well over $200 billion, and SoundHound AI is forecasting their revenue will be $150 million in 2025. So look at the market size, $250 billion, compared to where SoundHound AI is going to be at the end of next year, $150 million. And there's a long runway for growth. Now, it's not sure that they'll go along that line and increase their revenue and gain a larger market. But for investors, it's important to know that the opportunity is there. The opportunity is there, the customer interest is there, and SoundHound AI is in an excellent position to capitalize in that market. And even though they lost money on the bottom line, $22 million in the latest quarter, it's not an urgent situation. It's not a situation where they're running out of money and they're in critical need of more money. That's not the case. And this is the final thing I'll share with you here, is that they have $201 million cash and no outstanding debt, zero debt. So if you look at this pace, 22 million in loss, and you look at their 200 million in cash, they have at least a year and a half of runway, even if they continue losing money at this pace for 6 consecutive quarters, which they probably won't. They will probably, at some point in 2025, management has said they'll start to approach breaking even, and that stage for the company. And so they're okay in terms of their cash position. It's okay. It's not ideal to be losing this much money on the bottom line, but they have the cash to support this level of loss at least for the next 4 to 6 quarters. And then if they hit milestones between now and then, they can always raise more capital from investors, because they can go back to investors and say, look at all this progress we made. Look at these orders we have. We just need another $50 million, or we just need another $100 million to sustain us for the next year and a half when we think we'll be break even on the bottom line. And investors will say, oh, okay, we see your potential. We see what you've done to this point. Here's your money. Right? So I thought these were important things that SoundHound AI stock investors should really know about. If you liked the video you just saw and you want to see more just like it, please subscribe to the channel. I can't keep this channel free without the support of viewers like you. And if you're already subscribed, thank you, and I appreciate your support.